This is at the Ocean Shores Library. We have Councilmember Sires and Councilmember Klein, and I know Councilmember Scott is trying to get in and work at her real job too at the same time. So she'll be phoning in if she can throughout this. We have established starting the meeting with public communication. So we didn't receive any written comments to my knowledge. So I see Dawn is online and Andy's in the room. Andy, did you have anything? No, public comment wise? Okay. Dawn, do you have a public comment? 3 minutes?
Yeah, can you hear me?
Go ahead.
Oh yeah, thank you. Good afternoon. Yeah, I have a few things, Sarah, and I don't expect you to address everything, but I'll get back to you if you don't find these to get to them at all. My first comment, I read the report in some detail, and you mentioned there a term called LGIP interest earnings, and I wonder if you could explain that if you feel up to it. That's just one of my questions. And I'm really trying to understand the cost allocation situation, because that's probably one of the issues with our general fund. And I read in your memo, you talked about the elimination of transfers into the general fund, and those are the cost allocations, but they haven't been eliminated. Haven't they just been reduced to be more realistic to what the general fund is charging to the enterprise funds? But you made reference to the elimination of those cost allocations, and I see like the table in your report on page 11 shows the cost allocation budget for the biennium, but it shows zero transfers to date. And so aren't we making transfers every month, a proportion of what the budget is? I don't understand that they've actually been stopped. Another question that I have is on page 12, the utility department number 144 shows a negative biennium to date expense. And I guess my question to you is, how do you have a negative biennium expense for any department? This happens to be number 144. And I know you're going to talk about just some of the things that I see that I'm concerned about. Is first of all, it's going to be obviously a key topic today. The general fund balance is now dipped to $1.7 million. And it was down from the 2.5 objective. Last month, it was down to 2.3, and now it's down to 1.7. And I look back, that's the lowest on February. That's the lowest it's been in 5 years. Over the last 5 years, at the end of February, the general fund balance has been anywhere between 2.78 million and 3.44 million. So I know you'll have a lot to say about that. I just don't see that can be explained by the reductions in revenues as you show in your report, because those are tens of thousands of dollars, not the hundreds of thousands we're talking about here, and or whatever it is. So I certainly want to hear more about that. And I just want to mention one more thing. Today there was a hearing this morning with the hearing examiner about building the City Hall police station at the old Ace Hardware building. And I know that hasn't been, that's a very short notice. I know why there's issues about real estate transactions and things. But as you recall, we had a bond that was a $12 million bond. It was going to cost about $19 million. The voters turned it down. And
3 minutes, Don.
Yeah, okay. I guess my question is, where's the finance going to come from for that? And what are the plans right now in the short term? Because construction is supposed to start this year. It was changed from 27 to 26. Okay, thank you.
Thanks, John. You guys decide. I'm not as it's not council, so if we want to go through and answer the questions, we totally can. We can naturally kind of answer them as we go through. Their legitimate overview questions we're happy to answer, but we want to be respectful of what you guys want to do.
Yeah, I think we can answer the questions. I think the funding in regards to the ACE building is preliminary at this point, because we need to find out if that building is even feasible. And, that's one of the reasons that we hadn't brought it out in the public in terms of, real estate transaction. So I think we need to hold off on that.
Completely fine with me. Okay.
I have a question.
Oh,
Carol,
go ahead. Yeah.
can we wait to maybe answer some of those questions at the next finance committee meeting? So it gives you some time to get some of those answers rather than go from our agenda, I guess, if you have the answers and there's enough time afterward, maybe?
Yeah, it's completely up to you guys. I think that we owe an explanation, and that's why I've kind of established doing these memos, because we are going through what's not the norm to the city of Ocean Shores for like Mr. Williams said, the last 5 years. So I've started establishing doing those memos to kind of give you an overview of why you're seeing a difference in the general fund. It is interesting because as we've worked with other municipalities, and then of course the CPA that you guys have met a number of times, the last, I dare say decade of the way we have been doing our general fund reconciliation has been inappropriate accounting. Keeping a general fund at a specific balance month over month instead of a true up trend by the end of the year is inappropriate accounting, which is what we have always based everything around. Everybody's first eyeballs go to is the general fund at 2.5, and then everybody stops. They stop looking at our water fund. They stop looking at our EMS fund. And so, because we went into panic mode too, because that is absolutely what we know. You guys, we've talked about it, 2.5 in our financial best practices. We put it as 2 as a guideline. That's where we'd like to be. And similar to the golf course, which we'll talk about later, they have their high months and they have their low months. So, first and foremost, I will let Shantae talk about our cost allocation as it pertains to the true up, the Fund 144. She's really diverse in that. As for the 1.6, because we're not taking all of this, and I say arbitrary because it's not arbitrary because it was backed by a cost allocation. But the cost allocation that we previously had through the other company that we paid $25,000 for did huge deficiencies on things. And they utilized those deficiencies to inflate the number that came from those enterprise funds into the general fund. So what you're seeing now is basically we went to baseline budgeting. This is what we believe the enterprise funds owe us based on this equation, and then by the end of not end of the year, we've chosen to do it quarterly. Each quarter we'll do a true up and see if what the enterprise funds paid us was sufficient, or if we needed more, or if we were overpaid.
Yeah.
And that's what we're doing now. And it's interesting to me that a $25,000 cost allocation was literally bleeding our operational funds, and a $3,000 cost allocation is fixing them. So that's why you're seeing that 1.6. Why it went down, it's very easy. It's outlined in that memo that we wrote. We've just paid all of our huge insurance payments, $319,000 specifically, plus any costs that we had. That was affecting. I don't know what that noise was.
It was my shoe.
Oh, okay.
My wet shoe on the wood floor, squeaking.
So we had all of our high payments. That was just one of them. And that's across the board. I'm sure that council member Scott can speak from another municipality standpoint of what their January, February, March looks like. April's will be higher. May's will be way higher. Our biggest source of revenue and our most diligent source of revenue is property taxes. And I think that we have veered away from all of the grants that we've received. Specifically, I'll speak to 3/10 money. 3/10 money is specific to the police department. We have used that as general fund money. If we go back in time and we've looked at where the council is told they have X amount of dollars in surplus money in a budget, that's included monies that were specific to the police department. So
So will those be separated out now?
that's what the whole hope
Yeah.
is.
Yeah.
But what I am telling you right now is surpluses will happen when, maybe we're not doing big projects for the year and maybe we're looking at just reserves for the year. I cannot say to you, you're gonna have huge $800,000 surpluses like previous finance directors do if we're doing our proper accounting. What I can say to you is based on this cost allocation, our operational funds, the way we're not arbitrarily taking money from the enterprise funds is that you will not have to fuel those with the general fund.
Mhm.
Yeah.
Also-
And Sarah, did you make mention too, because I know Dawn had mentioned the revenues, that were dipped dangerously low, or not dangerously, sorry, they're low. But also aren't most of our big expenses always come in the first couple months of the year, all your insurance and all your payments that you have to do and programs and everything else.
Yes, and we didn't have the grants last year. Last year specifically, we had a ton of money. Congrats to Becky, Marshall, and Tim for the burn.
Mhm.
You know what I mean? That was a general fund account. That was millions of dollars that came in for that specifically. And then I also challenge, and we've said it from the get-go of 2020, is that in 21, 22, 23, we had all of the ARPA money that was coming in. You know what I mean? We weren't allowed to do certain things during those years, so the money sat and did nothing. And then we did big projects. So I think what the council, administration, community is going to see is real numbers for the first time ever, but numbers that we can say confidently will trend like this.
Yeah. It's not artificially inflated.
No. And I guess my brain just doesn't work like that, so I can't, if it's supposed to go here, it needs to go there. So, we'll do with what we have as we go along. But we don't, anyway, with that being said, 1.6, we have spreadsheets of all the property tax trends, the sales tax trends, all of those different things, and those are all going as they're supposed to be. So we know our general fund is going to go up, and we know with the expenditures we anticipate, we will be around that 2.0, 2.5 by the end of the year.
Okay, I actually did have a question similar to what Don mentioned in terms of the LGIP interest trends. LGIP, I understand that's a big investment fund, isn't it? So my question is, where is the increase coming from? I mean, given that the market is down and interest rates are pretty awful, where is the increase coming from?
So the increase, so the LGIP is, it's our money. It's the high interest bearing account. So the money that goes into the LGIP is the money from our business license. So when somebody buys a business license, that all gets deposited in there. We also have the money that we receive from the county goes straight into the LGIP. So for example, like if we get $280,000 last month from the county, it deposits into the LGIP. The money that you see on here, the increases from some of those, if you're looking at the revenue report, the interest from the LGIP is broken down by percent for each specific funds. I would have to do some research to see how that was established because they've been the same.
Yeah,
And that's
I was just interested
Yeah.
in why it would go up when
Yeah.
everything else we
So we
see.
had more money in there essentially.
Because we had more money, okay.
We had a lot more money.
That's the simple answer that I.
Okay, but it is something to look at because we do have this sheet. So at some point they said, if you have $90,000 of interest for that month, it gets broken down between these departments in these various percentages. And we don't know why these specific percentages were established. And if they can't be looked at and if we need to send them another way sometimes, but it averages.
Like the ARPA fund is still getting interest on there, and so that should be reevaluated, and council should look at those and how they want to take the percentage from ARPA and break it into the other funds.
Because it's just sitting there as revenue and not being put anywhere. So those are like, there's a lot to it that I don't think anybody ever really talked about. And that's where we have established getting very creative, you know what I mean? Using our LTAC funds as they're supposed to be, using our TBD funds instead of the general fund, because it's faster to just go to council and use general fund monies. Using our enterprise funds for enterprise projects, not the general fund. So that's what we're fixing now.
We're taking it apart.
We're taking it apart, putting, and we cry and we, and we do this, but no,
It's been a while.
it ends up, yeah, it ends up where that just leads to another question that leads to another answer. And so it's all been really good because we definitely feel more confident in our budget and where we're going and how we can establish legitimate reserve accounts and track them and keep them. So it's not surprise the fire department needs SCBA's. Well, I thought we had the money for those. Well, we did until they got rolled up into your surplus money. So that's what we're working on. We talked about the cost allocation true up, which I do think might have answered Mr. Williams' question on page 11, excuse me. Page 12, where he's talking about the negative revenue for Fund 144, which is now the new utility fund, which utility used to be 439, and we eliminated that. So if you want to talk biennium to date on the negative revenue on 144.
So how that's working is we didn't budget for 144. So all of the budgeted amounts are still on 439. So when I've worked with Tara, we're just kind of watching it right now. And that's kind of based off of the revenues from the water and sewer. So we're going to take a look at it. I think that's going to be part of the quarterly true up. And it should start increasing, but
all of our budget stuff is still under 439. We're doing all of our expenditures under 144. We have no revenue at this time going into 144 until we do that true up and transfer it.
Then it'll balance out.
Yep.
Perfect.
That's how we can say with certainty, we are not taking more than we should be.
Yeah.
Okay. Are we okay on and I mean, finance committee and it's the financials, but I kind of think we know where we're sitting between last meeting and this meeting with the finances, unless you have any specific questions regarding them.
Yeah, I did have a point, the one that you have here.
Okay.
Doesn't have the page numbers, but it's the February 2026 executive summary narrative. And, with our target being 58.33, I noticed that all of them are pretty close. The one that's the most over is EMS. Are we projecting any problem there?
104. You're on this main page because it's.
I'm on the main.
59.
Well, let's see, I made the mark on the one I printed out. Page 8 is the one I printed out.
Oh, it's 63.
that's the revenue. They're 63%.
Oh, I'm sorry, okay.
2% revenue, they're at 59.11 in it.
So they're a little.
Okay, so just a little over. Okay, sorry, I was reading that wrong. Because I know there's been some concern with that fund before.
And we, yeah. Yeah, no, we're okay right now on that.
Okay, yeah, it looks like we are.
Yeah. I know why planning, and I wish typically when it's well over, typically there's a budget amendment or something, and I know what this planning one is, and I failed to bring why. I'll have to send a note out about it. I know that something had to be expended from planning for.
Planning like is in Marshall.
Yeah.
Did it have anything to do with the berm or?
No, it was something recently. I'll send a note to finance committee with that. And I'll, for the citizen's sake, I'll add it to the, finance department memorandum so that it can be, put in the agenda packet. Cause I know that there was one for that. You got anything else? Lisa, do you have anything?
Nope.
Did you have anything else, Denise? On that? All right, so prime time Ocean Shores Golf Course. So we gave a little background last night at the city council of what we've kind of done and what we've established at the golf course. And I am pleasantly, I mean, again, we went through every radical emotion you can.
Might have cried over that.
We actually might have cried on that one. But the staff that is on board down at the golf course has been outstanding. We have worked well together. In your packets, we had talked about, because right now their revenue and expenses have like 2 lines apiece, or one has 2 and one has 4. And I include them in the packet. I'm sorry, Lisa, that you don't have the packets that I had for everyone here. But we have the old revenue and expenses here, and then we have what the new ones will now look like. And we went over it, so everything's lined out. So there's no more questions what revenue is coming in for and what expenditures are going out for. There's gonna be a little bit of work backdating the first couple months of this year, because officially today, we went over to the golf course, their point of sale system now matches our new codes. And so they will provide a report that matches all of the money of all the things. If they sold golf balls, if they sold hard goods, soft goods, alcohol, everything, that report will match our revenue and expense
So these
report.
are gonna be their account numbers.
Yeah.
Those are the account numbers, and they're already established. I provided them in your packets here.
I did have to make 3 updates on these bars codes. One of them was the first line for the smart card and the gift card, and then it was the 3rd one from the bottom and the very bottom one. So those codes will have a slight change in them, and I can, if you want another copy of it.
And so tomorrow, what we're gonna have our accounts payable clerk work on is going through and itemizing this so that we could do similar to what we did with the cost allocation or the mechanic stuff. We're gonna go through and put all the things where they should have gone, so we know where we are. So that has already been established. It didn't require a budget amendment because the main fund was already created. So I just automatically assume, well, we're doing new codes, we gotta, so you won't see that at the upcoming agenda. We were able to establish those without, because the council had already approved main funds for the golf course.
So question.
Yep.
Where does for, all of the express workers, cause they're all being paid through express except for Phil, right?
No, they're all being paid through Express.
Even
And
though-
I'll actually, if you'll allow, when we spoke at the last finance committee meeting, we talked about, do we bring these people on under the city's time
And
and
we
all
said
of those
express.
things? Well, we ran the burden rates and it was within $2 if everybody was single with no kids. So it's just not worth it financially
Right.
as we go through this kind of experiment. until we get real data and real expense and real revenues to offer that. So at this time, we had payroll bring up all the burden rates and put it all into spreadsheets. And we tallied those up with what we've been billed from Express. And we just stick with Express. On top of that, Express then takes on the liability also of the employee. And I mean, that gives us a little grace as we go through this.
And so
To
the,
your question, typically they would be ran under professional services. We will not run them under professional services for this experiment. We will run them under salaries,
golf course salaries.
golf course salaries. Typically, Express personnel in all the other places that those would be used in our revenue or our expenses are under professional services. For this, because we want to provide whoever or whatever entity and the council, this is how much salaries cost,
Okay, perfect. Thanks.
and not try and figure that out.
Yeah. So we know for sure what we're doing with them.
So with all of that in our meeting also, the revenue that's coming from them this last month it's extreme. And I just want to put it into perspective for you. January, they did nothing because Troon said nothing. And everybody was like, well, what are we doing? And then February 1, we kind of took off. But February 1, we also didn't have all ducks in a row. They didn't have a liquor license. They didn't have food. They didn't have cooking stuff. They didn't have any of that. So keep that in your mind. So we had the gal down there plus with our Square account, what we've seen come in. In 2024, January to March with Troon, the revenue was $162,790. In 2025, January to March, it was $156,845. And I put her on the spot tomorrow, and they're not completely cleared out. Obviously, for March right now, she still had more data to enter. The Ocean Shores Golf Course not operating essentially in January and operating without liquor license and whatever till last week, 2 weeks ago, is at $154,839.87 for 2026.
That's interesting.
Yep, the food they are pumping out of there, the alcohol, they have, we kind of talked about it last night. They'll, in the next 2 weeks, roll out their new website that has amazing videography, pictures, all their tournaments are uploaded. And we're working through all the liquor stuff right now. I was gonna bring that as amendment to the council, but it was Tuesday, so I just assumed it was a normal Tuesday. It was a special meeting, so I couldn't. However, for beer and wine, Crown Distributing is the only distributor for Grays Harbor. We're doing one last check. Before, there was two because we had a council member immediately send in a question about Martin Burney Liquor. That was only an option when the convention center specifically was doing beer, wine, and spirits. The golf course only does beer and wine. So that kind of puts it out. So go ahead.
Do you think that, well, I suppose it will wait until we decide what we're going to do at the golf course, but do you imagine having spirits out there?
I actually asked them about that in a meeting we had 2 days ago, and they said the liability on having hard alcohol at the golf course for most, and more specifically, they said for our small golf course where we are right now, it's not worth it.
Okay.
The amount of alcohol they sell for it to be beer and wine is enough for them right now.
Okay.
If they establish we're just, we've got all of our ducks in a row and all of our things are fixed and we will broach that subject, but I guess the liability is massive. Because I did have that same thing.
And I have one last question. in 24 and 25 from the January to March period, do you know what was liquor and food sales?
I don't have that broken down, but we
Okay.
could absolutely provide that to
Okay.
you.
Because it's included in those two numbers, so whatever
Correct.
was in there, we can assume that we could have added that to the 154,839 and figured out that it would have been.
Well, and I will say just for 3 months on the expenditure side of it, we didn't pay $24,000 in management fees.
Yeah.
So just
Alone.
that alone, and there's a couple, 4 or 5 one-off things that we know those expenditures aren't happening anymore, fees and such. We are not in a battle, but we've also caught something that we wouldn't have caught if the city wouldn't have taken over. When you lease out a property as a municipality, there is a personal property tax assessment done by the county. If it is city-owned and operated, there is not. We've been being charged for the last 3 years property taxes for the pro shop of the golf course.
I didn't think that they could do that because I thought on personal property had to be, we own it. They can't charge somebody else for something we own.
Working on it.
Right, so when we pushed back to the
Yeah.
county, they said, well, we're gonna talk to the Department of Revenue and get you the RCW. And in the meantime, we said, hey, this is the way we understand it to our attorney. And she said, you're absolutely right. So
Yeah.
that could be another $15,000 in revenue we get back.
Yeah, just for the 3 year or for the 2 years.
Yeah.
Did we pay that when Kurt had it?
No.
So it's just since Troon had it,
Correct.
which there really was no difference between Troon and Kurt.
Nope.
So why, I'm wondering why they
But
started.
because we leased to Kurt.
Yeah. Oh,
Yeah, and different.
Yeah.
We didn't lease to Troon, but on the returned address that the county has for Troon, it said leasing.
Yeah, so they called Troon
But
a
we didn't
lease
it.
and then charged us personal property tax. Is that
which they
what-
can't do.
Yeah.
Yeah, which
that's
they
illegal.
can't, yeah,
Pretty
so
illegal.
we're like, wait a second, terrible, we don't pay taxes, like, you know what I mean?
Yeah.
So,
Yeah.
and then we were immediately like, why are we getting a bill?
We need to have
Well, it's
money.
almost
of
like
course.
they should not only pay us back, they should pay us back with interest.
Yeah, so, I have an email started based on what the county has said, and I immediately knew, you guys all work, Andy. Like the minute somebody says, well, I'm gonna check on that.
We're gonna beat you.
You
Yeah,
should
you check on
know
that,
this.
why don't you?
This is your jam. Like, I'm not coming to you and asking about real estate.
And that was even a week ago and we haven't.
Yeah, a week and a half ago. So that could be another, nice chunk of change back into the account. So I do feel I'm pretty excited because this is also their slow months that we're just trying to get everything running.
Yeah, it'll pick up.
So that's kind of what we talked about.
Kind of makes me wanna golf.
I'll drive a cart. But that's what we talked about, last time. We wanted to establish these so that they mirrored our governmental accounting opposed to their profit and loss statements and so on and so forth. We wanted to show you the old version, the new version, which you have. I do have a copy for you, Councilmember Scott, whenever you want to pick it up. We've provided that funding sheet of where we were 24, 25, 26. It's very condensed. It's not itemized out, but we can get you that information. And again, we go back to last night where the council approved, and I just want to reiterate, those golf carts, the return on that is about $90,000 a year. So that already makes up for the expenditure of the lease and then brings in additional revenue. And that's what we had on the golf course. It went a lot better and a lot faster than I anticipated. when we spoke at our last finance committee meeting. So it should essentially be operating similar to what all of you would expect our convention center accounts to operate as.
Do you feel comfortable? Do you think, I mean, I know it's a little
I
early.
never
at
feel
this point.
comfortable. I absolutely
No, I meant,
never
do you
feel
feel,
comfortable.
no, I know it's too early at this point, but do you feel comfortable in going forward knowing that we have the capability of taking care of this golf course ourselves?
Yes,
Yeah.
yep.
And I know we have more months to go and it's not summer yet and craziness.
Already what I've seen and the I mean, they are on the spot down there.
They want it to do this.
They want, they're
Good.
putting in their own time,
Yeah.
their own energy. I mean, they want to show that this golf course can succeed and be profitable.
And the communication is really good.
The communication's outstanding.
And you have it, so do you think you're gonna get any pushback from the no cash still at all, maybe in the with summertime?
Everything, as I had said to council last night, and when we did meet today, they said that they had gotten some pushback, and we told them, you know, we are trying to be cashless. Aside, there's a tip aspect to this. They can accept cash tips because they have to deposit cash tips. There's a revenue line item, they'll have a policy, so on and so forth. In the event that we start seeing a really hard pushback when they get into their higher season, I did say to them that we'll have to go back to that topic with the mayor at that time.
Okay.
Because it's easier for it to be cashless, so it just seemed easy to start it that way.
And a lot of places are going to.
A lot of
And
places.
she did say they've gotten some pushback. I'm interested on the difference in pushback from, you know, the couple of people that are here all the time and doing all
Yeah.
the things versus their high-end season of, you know, a lot of people.
Yeah, let's
Do
see it
you
as
have a
lot.
different policy when it comes to events? Because I know sometimes that a lot of people, when they sell mulligans and strings and everything, it is cash. Or will you handle those differently on events?
Those don't, like at the Grace Harbor Youth Athletics,
Yeah.
that cash that they accept for those things, that doesn't go to the golf course.
Yeah,
That's
we talked
strictly-
to her about those kinds
Okay.
of things.
Well, that's what I
today.
meant about events, so I was
Yeah.
asking.
Yeah.
Okay.
So we won't find ourselves in, and here's the thing, because we're not gonna take away their ability to collect tips in any capacity. They will have a way to deposit and a policy that mirrors that. They're following the same deposit transmittal as our municipal court, as the convention center. There is an ability to deposit cash, so if they ever wanna broach the subject of having a till down there, then I would need to bring back to council another in-press resolution, adding that down there. So yesterday I had heard nothing about it, and that's what I had stated when we met today. She said there has been a little bit of pushback, but she didn't feel compelled yet to go make that kind of statement. Where are we at when it gets to the big season, and go from there.
Yeah, I think what Allison said, I mean, we've been going up to Seattle for events and stuff, and everything is cashless.
Pretty soon it's gonna be your phone. They won't even take the card. Like,
Right.
it'll just be
Yeah.
your, you know.
Yeah,
So, but, you know, we're a different climate out here still. We're a couple years behind, so it might be too soon for us. But I was very grateful to hear, like, they're not shotgun down there. They are thoroughly thinking in the capacity we would too, so that helps.
good.
But they have gotten pushback, where last night I said we hadn't heard any, today I did. So,
Well, and I think one of the things we have to think about too, I know with the golf tournament I help with, a lot of people, they come and they fill out their paperwork and they try to pay with cash for all their tournament fees and stuff. So what we have to do is the people having events, is they're getting that information out, let them know it's no longer cash.
yeah, cashless
Yeah.
event, which is what a lot of places are
Yeah.
posting now.
And
The
I think
other thing with that would be,
for those events, the event holder would just cover the greens fees with their own
account.
Yeah.
And that's
card and take the greens fee cash.
or check, or
Yeah.
just cashless. Check is,
Yeah.
you know, to a certain extent.
Well, because sometimes those
check makes things
alcohol
easier.
carts, the alcohol carts, people serving the drinks get tipped all the time.
Yeah. And that's why we didn't take away the ability for cash tips, but they have a revenue code that they have to turn that in every day. And then we actually do what we do at the convention center, and we cut a check to that person for their tips. It's reconciled by paperwork, and a check that coincides with that goes out. And I mean, they have just everything, they've just caught on to all of that stuff. We did go over a lot of the event stuff because, you know, it's a shell shock. Like we can't do donate, and you know what I mean? You've got to get more clever about stuff. It is that event deal. We talked about that today, where, you know, the events, the people putting on the event should do all of this, and then they should pay you, kind of deal. We talked about those things. So that's what we have on the golf course.
Sounds like such an improvement over
Yeah.
what we've had.
It definitely is an improvement.
To be able to see everything.
Yeah.
And have a conversation where I'm not puzzled at the end of it as much as I was.
We're mad.
Yeah.
Yeah, well, and to get an accurate accounting. I mean, that's been the problem for 2 years with Dream.
Yeah.
Right.
Yeah.
Yeah, right, and before that, yeah.
Okay, so if none of you have anything more on the golf course, which of course I think this is a continued, just as our cost allocation was, just as our financials are, we'll keep bringing the golf course stuff back separately overall this month, because it's gonna be an experiment. We're going to be walking through it the whole time. So the last thing that we had on our agenda was the budget book. Remember the ClearGov debacle? We actually did cry that time.
A couple
times. And when, you know, when we took out graphs and all of these things, you know, it went from 300 and some weird amount of pages to 70, but then there was things it took out that were informational and better, and we want to do better, but we want it to be something we all like, not just something the finance department lands on. Something we feel confident we could put together. So we had gotten a few different, and this is what it is. So feel free to look around, whatever ones that you have found that you like. They're all over the place. These are the two layouts that Shantae and I liked the most. And this is not brown nosing Aberdeen, because there's some, but one of those was Aberdeen and one of those was Algona. And the reasons, if I'm being very straightforward, these were specific, concise, and straight to the point. Like, there's stuff about the city throughout it. There's stuff about what we've done through the year. And when you get to the pages of each department, which we kind of were missing last year, the information about each department.
Yeah.
It kind of just says, here are the numbers, here are the weirdo, graphs year over year, and because we were in a weird biennium. Aberdeen kind of helps us a little bit go back to what some people are used to seeing prior to ClearGov, what we used last go around, but more modernized for a nicer report. And I think that we've found little bits from each one that we'd kind of like to take and put together. But we're not sold on just these two, but we do need to kind of decide what we want our budget book to look like by June.
Well, and I can tell you, just reading through these two that you gave us compared to how our budget's always been done before, that you need like a magnifying glass and everything. It's, yeah, and so easy to read and understand. So I think it would be good, not just for the council, but for the community members who want to look at budgets. I really like.
I'm
these two.
I'm biased, so don't ask my opinion.
Yeah, you'll know exactly what's going on. There's a historical thing too. That's what I've noticed it's really hard to keep track of what budgets we're doing year over year. And I think that that's sometimes how reserve accounts got, because there'd be this little section.
Yeah.
That's what we noticed when we were trying to do all the ClearGov stuff and we were going to the other, budget books that we had, there'd be this little section of, well, we put this money aside for this. Well, then 2 years later, nobody ever looked at
Yeah.
this. And so it's gone.
SCBA.
Yeah, so, I mean, that's the one that killed me. That's why
So-
we bring it up.
So
like
on there,
that.
the one thing I like is each department, we have to
Yeah.
go through kind of what our department is, then we talk about what we succeeded at in the previous budget year, and then what our goals are. And it just keeps us on track, and because this budget is more of a performance-based budget.
Yes.
And then we're even talking about looking at going to project-based budgets so that the council's priorities can, be reflected within the budget, what those are. But I don't know if we will hit that in 27 or not, but that's kind of the direction. But it allows you some more flexibility when you have that ability and you break it down to that level.
Well, and I think that it's really good for historical value to be put into these where they're putting that in the narrative of their department. This is how we got here. And that's like what you were saying, where they're talking about the things that they did and the things they still need to do. And that's reflective in their budget request and their line items. I don't think we are even close to being able to do a project-based budget because we have no designated reserve accounts for all our departments. I'm a little.
We don't either.
Yeah,
We don't either. So just so you know
that
that,
makes me feel better.
it's that how we do it is that, when we do our budgets, if councils, their recommendations are that this year we wanted to focus purely on abatement. I'm going to throw that out there. Then our budget is going to see an increase in abatement funds to, give get the council where they want to see that action take place. And so that's what I mean by budget. So we may, right now, I think for Aberdeen, it's I get $50,000 for abatement. And unless I have a big abatement, we're pretty close to never, going above that. But that was my point, is that if they want to focus and really hammer on the whole city, it allows that flexibility of council's goals to be reflected within the budget.
I like it.
Yeah, well, I like the section in the back on the performance matrix, connected it to council priorities
Yeah.
in Aberdeen. I don't know, Lisa, but it looks to me like this is very similar, at least in format, to the revised county budget, which I think they also made much easier to read than their previous budgets. I mean, I like Aberdeen's format.
We've
And
been
so-
doing that for a while.
So we don't have to have the only reason council approved ClearGov is because there was a monetary amount to the program, which that program, by the way, was $30,000 a year. So we did not pay that this year. We got rid of it. We didn't even renew it.
We didn't know.
Yeah, we just stopped, even right now, if the council feels, because we could legitimately start building all of the front end of this, the historical stuff about each department, the imagery, all of that stuff. If the finance department or finance committee feels comfortable utilizing Aberdeen and gives us some liberties to pull some little things out of Algona. And
I will stay neutral on this because I am biased, most definitely. I would say though, before you tax your department so much, put some responsibility and onus on those departments.
I think you forget the control freak that I am, Lisa.
Well, yeah, but I get that, but I think you can control in terms of, making sure that they're getting you what you need on their deadline.
Well, and there's no question, the fact that we have, Ricky now, like, I can tell you with great certainty, all of Public Works will go to Ricky because he will just do an outstanding job. So, I mean, there'll be some help in the other departments, but that one I know, he's probably got his own one. He's Nick Bird, like, in the realm of, you guys remember him with paper. He
yeah.
likes typing and stuff, so he'll do great.
Yeah, Lisa, you said you're prejudiced, but the question is, has this really worked for you? I mean, because ultimately, whatever the budget looks like, we need it to work for the departments and for the public.
Well, I guess I'm the wrong, we as departments don't use the budget book. Because one, we built our narrative, we know exactly what we're supposed to be working on and doing, and we have our, budgets on the computer. So I don't flip the budget book open, but it is very helpful to the public and the council.
In truth, it is for the public and the public only. We don't touch this after you guys have, like, everything is our revenue and expense reports. Like, we don't look at this ever again. It is
They can refer back to what departments do, because sometimes they do lose sight of that. Like, you might not know what specifically an individual department does, but you can refer back to your budget book to know. And you can also look at what are the goals they're working on this year outside of their normal day-to-day functions. What are those priorities? And then that gives you the ability, or gives us the ability as council to ask questions like, where are we at with this year?
And I don't think you guys got that out of that deal. Of course, the city's done an excellent job doing a ton of projects, but we don't have the accountability of, this is what we said we were gonna work on.
Right.
I mean, I think we've held true to that. I'm not saying that, but to Lisa's point, there's nothing for you to refer back to and say they did this. They were supposed to do this, they did it.
I mean, I would say for you guys to go ahead and go with
Whatever you
our
want.
format and pick and choose and put together what you think is gonna work best, because you know better than we do. But I really like this format.
Okay, then we'll probably go with majority of Aberdeen, but there were little bits in Algona that we liked.
Okay.
And that's what we had. And we can get started on that.
Do you need that in a different format at all?
No.
Okay.
Yeah, no, we have, yeah.
Okay.
So that's all the finance team had for this finance committee meeting, unless you all have additional things or there's things you want brought to the next meeting. If you want to have Andy has a question now, that's up to you guys. I'll leave it up to you guys. Go for it.
Where can a citizen get a copy of that Aberdeen budget?
I attached it to our finance committee agenda. You can have this one.
Okay, very good.
Yeah.
I think it's probably online too.
Yeah, but it is attached to our agenda as well, because it was a example of what we were looking at.
Okay, so I can tell them the two.
Absolutely, yeah.
Algona's?
You want to listen to?
Councilmember Scott, do you have anything further?
I got nothing.
Councilmember Klein?
No, thank you. This is
Thank you.
great information. I like the way you've broken down the golf course stuff.
And if you guys get out there and there's more questions or whatever with the golf course that we, because all of this is I said it last night, I didn't think I'd have to learn this much about a golf course. So, if you get out there with community or, golfers and there's things that they think would be helpful and it's within our realm, please let us know.
Sounds good.
Okay.
Okay, cool. Thank you.
Cool.
Thank you guys.
Bye.